Hello, everyone, and welcome. I'm Zaynab Hoosen, Senior Africa Analyst at PANGEA-RISK. Today's webinar will be about African sovereigns refinancing their debt owed to China from US dollars to Chinese yuan. To unpack these developments and explore what the implications of this new era of China-Africa economic engagement is, I'm joined by my colleagues Bilal Bassiouni, our Head of Risk Forecasting, and Saif Islam, who is our Head of Asia Forecasting. Now, China is Africa's biggest bilateral creditor. Over the past 2 decades, with its Belt and Road Initiative, China has been a major source of financing for infrastructure, energy, and mining projects on the continent. China's willingness to lend with fewer strings attached than traditional Western creditors was welcomed by African partners. However, in some cases, where the risk of non-payment was high, natural resources were used as collateral for these loans. And this has fed into a negative narrative about Chinese borrowing on the continent, where China has borrowed more than what African countries are able to sustain. This has led to some African countries struggling to meet their debt obligations, which is why we see these new deals taking place for refinancing their debt. Now, in October, Kenya struck a deal to convert $3.5 billion of its debt owed to China from US dollars to Chinese yuan. The refinanced amount actually forms part of a loan that was used to build the Standard Gauge Railway from Nairobi to Mombasa. Now, Bilal, perhaps I could turn to you to talk us through why African sovereigns are eager to refinance their debt in yuan.
Thanks, Zaynab. I think the answer lays in part to the introduction that you just provided. So many African governments are converting portions of their Chinese loans into yuan because their dollar-denominated obligations have become quite difficult to service, particularly over the last few years. As you know, and many of our listeners would know, dollar interest rates remain high, and most African currencies have also weakened, which then raises the domestic cost of repayment. So when governments face this type of constraints, especially in accessing capital markets, any increase in the cost of servicing in the dollar debt immediately tightens the fiscal conditions. So China now is willing to restructure these exposures in yuan, and often with extended maturities or lower interest charges. So this provides, in essence, a relief to governments that need to reduce annual debt servicing. And also, the refinancing in yuan provides a diversified currency exposure for many African countries. So those that rely predominantly on dollar borrowing, this creates the concentration and vulnerability within the dollar when the dollar strengthens. So spreading the risks makes more sense for many governments at this stage.
Interesting. Thanks, Bilal. It would be interesting to see what the real implications are of these deals further down the line, with Kenya, of course, as the case study. Now, Bilal, you spoke about these refinancing deals from an African perspective, but Saif, as our specialist on Asia, could you perhaps tell us about what China stands to gain from this? Like, what are some of the advantages of African sovereigns converting their debt obligations to US dollars, from US dollars rather, to yuan?
Thanks, Zainab. Yeah, I think China gains several advantages from this. Firstly, it supports the internationalization of the yuan and reduces reliance on the US dollar. If African governments borrow and repay in yuan and use this currency to pay for Chinese goods, China deepens the role of yuan in trade and finance, and slightly reduces its exposure to US dollar related risks. Secondly, it tightens China's economic and political ties with African borrowers. Once a country has yuan denominated debt, it certainly has a strong incentive to keep trading with China to earn yuan, to hold yuan reserves, and to use Chinese banks and financial institutions. That creates long-term dependence on Chinese financial infrastructure rather than Western institutions. And also, last but not least, this can improve China's credit risk management, because if an African country is struggling with high interest rates or dollar shortages, yuan denominated repayments may be more sustainable. And that can certainly help China avoid outright defaults while still preserving leverage in any restructuring negotiations.
Definitely. And I think also coming out of the pandemic, seeing how many countries were struggling to meet those obligations, there's certainly an incentive on China's side to implement deals that make it more manageable for African sovereigns, not only to ease the burden on the African sovereign side, but also to ensure that China's actually gets repaid the money that it borrowed to these countries. So now we've seen that, well, we've mentioned that Kenya has managed to strike a deal with China to refinance its a part of its debt. But this is still the only country that has completed such a deal. But this deal actually ignited similar conversations between Ethiopia and China. Now, turning back to you, Bilal, could you tell us more about these conversations that Ethiopia is having with China about refinancing its debt, and also perhaps take us through what the potential impact could be for Ethiopia?
Yeah, I think that's a very interesting question, and Ethiopia here plays a quite a peculiar role given its ongoing debt negotiations under the G20 common framework with bilateral creditors, but also with private creditors. But given our conversation here is around Chinese negotiations with Ethiopia, a large part of Ethiopia's bilateral debt is owed to Chinese state lenders. So a large share of its external debt is owed to these lenders, and a conversion of these loans offers a practical route to improve its short-term repayment profile. So if that deal comes through, this will definitely help in that sense. So Ethiopian authorities' objective is to reduce the cost of service dollar obligations at a time when the birr, the Ethiopian currency, is weakening and foreign exchange reserves remain quite limited at this stage. So a yuan conversion here that includes longer maturities or reduced interest charges would definitely ease annual repayments and support the fiscal stabilization that we saw this government pushing to implement, particularly since the IMF deal that was brokered last year. It could also help Ethiopia progress through the G20 common framework by showing that one of its major creditors is willing to adjust terms. So the impact will likely or most likely depend on the final terms and the current currency movements. So if the birr depreciates against the yuan, the domestic burden of servicing the converted loans could increase. A conversion also reinforces Ethiopia's financial dependence or relationships, if you want to call it that, on China during a period when it needs to coordinate support from multiple creditors. So it will be an interesting development to monitor, definitely, and will likely have a significant impact over Ethiopia's sovereign debt profile over the coming few months.
Yeah, interesting. And I'm glad you also mentioned, Bilal, that although these African sovereigns might be moving away from the need for US dollars, it now opens up new sources of vulnerability to fluctuations in the yuan exchange rate, and it also exposes these African sovereigns to policies or a change in policy, in monetary policy on the Chinese side. So this is definitely new waters that we will be treading in. And I would also be curious to see whether Angola would be interested in such a deal. Angola is China's largest creditor in Africa, and much of its loans to China is collateralized by oil. So it would be something that Angola might seek to do, although we do see that Angola um, has improved its relations with the West, and it's also seen influx in foreign investment inflows due to the opening up of its economy. So there might not be a need for it, and Angola might, after 2 decades of challenging Chinese debt, Angola might rather just want to move away from China as a creditor. But thank you both for such an engaging discussion. We certainly look forward to see how this will unfold and whether it will bring new channels of engagement for China and Africa over the next couple of years. And we also see if the benefits that Kenya has been boasting about will actually play out. So thank you everyone for joining us, and we hope to see you soon.